Hey everyone, welcome back to CryptoCache. Thank you again so much for joining me here. Hope you're having a fantastic day. Taking a look here at Bitcoin, seeing what's going on, double checking a few key factors here. We're right back at 56,000. It's that tentative support range for us. Pretty much as low as 55.3. That's kind of that lower level, that 0.618 fib level. While it hadn't fully came down to that range, it's really close, okay? So basically what that means for us here is that we've got a decent amount of support below us. The more local high is the local low. That's essentially how it's supposed to work, at least initially. We may not see this, may continue lower, of course. There's still that possibility. I think that's less probable. You got to keep in mind there are some shenanigans, of course, and this is kind of par for the course, but U.S. inflation fell 2.5% and Bitcoin dumped 2.5%. I thought that was kind of funny, so I posted that. But generally speaking, the whole concept here is that inflation is potential reality, and the price action could continue lower because of that. So once more, there's that. Again, the fundamental catalyst we have no control over. From a technical standpoint, as of yesterday evening, we were doing pretty well, leading into the Asian market open at 57,600. They dumped the market, price held for a little bit, dumped a little bit more, was supposed to recover, and we got this instant rejection here as soon as U.S. markets open with inflation data, or CPI data rather. So anyways, that's kind of where we're at, the overall sense there. I still think from a technical standpoint, we're in good shape until we invalidate below 55K. We can pretty much presume the price will continue higher. We don't want to blindly consider that, but we want to recognize that is, we've still broken mostly bullish. By no means are we like on the macro, like to the moon, right? We're not even close to that. But we have like these good, strong midterm transitions, which should carry over. Again, we got to give it a chance to do so. Taking a look here, of course, at the resistance levels. Let's go ahead and double check and see. We can see a lot of resistance here at about 58,000 to 59K, right? Now, it's not a resistance level. That's basically just a liquidation range, and liquidation is based on resistance, okay? So a lot of people will put their stop losses just above or below that. And in this sense here, we can see a lot of liquidation between roughly 58.2 and 59,000. I would round up and honestly say about 60K, because if you zoom out here, it's a little easier to kind of spitball and say that, because we got about, what, 6, 7, there's about 15 to 20 billion at 60,000. And we got, again, another good little chunk of 25 to 40 billion at 59,000. So we got large amounts of liquidation occurring at higher price points here. Keep in mind there's just as much at this lower range of 52K. We're kind of in the middle of that right now, so anything could happen. Just know we start trending closer, we break 58K. I think 60K is very likely. Exactly why yesterday was looking pretty solid. We had the nice little bull pennant breakout. We still have our Elliott wave is still in play here. Keep in mind, so we're still more likely to increase because we haven't broken below our first wave. So again, some good stuff there. Okay, let's go ahead and take a look at the daily and work our way down, kind of recognize where we're at here. And once more, this kind of reaffirms the fact that we are not bullish yet, still under the 20-day SMA on the daily. Once more, a closure at 59 to 60K or higher would put us back in that little sweet spot, okay? So keep in mind, we're going to be looking a lot better when we get there. Between now and then, we got to keep our eyes open and make sure we're not just blindly taking long positions. We can take a look here, of course, at RSI rejecting tentatively off that 50 range. Stochastic swinging up, money flow index still increasing. These are generally favorable signs, but also showing some slight disadvantages there. We got a MACD potential FU here, and that's just a word that I use to describe MACD rejection. It's not official, but it's slowing its momentum down. Okay? And it would have been nice to continue to converge and break free from this range. We'd had a lot of momentum at that point. But between now and then, again, we just got to be mindful here. Daily time frame still is not giving us any bullish confirming factors, whereas the 4-hour time frame has and still is. We see here we're about the 20 and the 50-day SMA right there at about 56,000. All the more reason why we want a closure at 55.8 or higher today to kind of continue to maintain that range. Furthermore, we do have, of course, the 100 and the 200 above us. That's standard. We can also see our TSI is tapering off. MACD is soon to diverge, and we're coming close to 50 on the RSI. We're testing above and below it. So again, make or break at this 56,000 mark. We lose 56K today, I think there's a solid chance we may want to consider the price continuing lower at that point. Between now and then, we got to give it a chance to hold. This is a support range for a reason, okay? So anyways, stochastics pulling back, money flow index retracing. We're now below our local point of control here at 57,000, rounding up, 56.7 roughly. We can kind of see that if we zoom out a little bit. So again, a lot of volume in that range, kind of implying we got some resistance here. So we don't close above 56,000 at the very least today. we may not have any legs to stand on and the price may continue lower. Okay, so just be mindful of that. I wouldn't say necessarily just to open a bunch of shorts at that point. That seems kind of careless. But the key takeaway here is that might invalidate potential longs to the upside. If we take a look here, of course, at the Ichimoku cloud, we can confirm that we're in the lower lead of the cloud here. All the more reason why holding 56,000 or higher is important. Lag and span is free and clear, and the conversion line is below the baseline. So we've got good momentum on the downside. We've got a situation here that's kind of letting us know that a short position may be viable. But once more, we got to kind of see it and wait for this to hold and figure out if it's going to continue lower or higher here. We got to let the support range hold itself or get a chance to be able to maintain. If you don't, then you could be shorting the bottom and the price keeps going up, right? So at this point, we haven't fully invalidated yet. I just think that this was a natural correction based on a fundamental catalyst that has little control, or that we have little control over understanding or anticipating. And then, of course, this typical sell-off from the Asian markets, that's nothing crazy. That's completely normal, fairly expected. That was maybe about a 2 to 3% correction, which in most cases should be resolvable. However, of course, we had this extra little push to the downside with CPI data. So again, just stuff to be mindful of. I don't think this guy's going to fall yet. We lose 56K soundly here today. We close below it. I think that might be a consideration for closing the long position if you have one open. Us personally, right now, we're getting really close to our average entry at 56.5. So I'm not super concerned with our long position just yet. I do think that these shenanigans are going to continue. It's just the way it is. September is notoriously a red month, so I would expect the worst and hope for the best, but also be mindful and alert here that we haven't truly broken back to the downside just yet. I still think we have a solid chance to continue further up. Once more, times will change. We'll see again what happens later today when we reevaluate. So I hope that you learned something today, of course. Link down below if you want to become a better trader. Really quick to give a heads up on our community members. I saw some folks talking about our Premium Plus group. It is very beneficial. It's definitely helpful. Just make sure that you do use separate exchanges, right? That's why I recommend Bitunix and BTCC, because if you have multiple exchanges, you can use one for day trading, one for swing trading. Okay? You never should use the same pool to try to trade daily and swing trading. Okay, those are two completely separate hats. So try to just separate that if you can. Diversify, it's important. I just want to touch on that because I know a lot of folks are kind of curious. And my recommendation is always to have a separate exchange if you're going to day trade, separate exchange for swing trading, and even a separate exchange for spot trading. Okay, those three things should be separated because they're all treated differently. Okay, all right. Thanks again so much for watching. Have a good rest of your day. We'll see you in the next one. Take care.